This is Alan Gassman and Brendan Ketron, and we are here to talk about whether to take 8 weeks or 24 weeks and what all of this means for PPP loan borrowers. There's a lot of confusion, a lot of considerations. There's no need to panic, but there is a need to think rationally, to understand the rules as best we can, and to keep your options open. We don't have all the rules yet that we really need to solve these issues for every borrower, but for a lot of borrowers, we do know enough. We're going to talk about this in just a minute. Tomorrow, we're going to have another free webinar from 10:30 to 11 Eastern Standard Time for owner employees of S and C corporations. The new rules and guidance that came out last week, including the new forgiveness applications, had some curveballs for owner employees of S corporations and C corporations. You're welcome to attend that. You will get an email immediately after this webinar giving you a link for this other free webinar. Or if you don't get that or you're not sure, you can just send me an email and put in the RE line, I'm pooped, PPPOOPED, and we will get you signed up. You have our email addresses throughout this presentation. If you have other questions for us, please feel free to answer them. For a much deeper and thorough dive into these rules, there is a not so free presentation that you can purchase from Lineberg Services. You've got the link there, and that will take you to a not so free presentation. We have some other free presentations coming up that you see here on page 4. I apologize for the sound. This is because we have so many people on the talk using GoToMyWebinar. If you're not able to hear this talk, there will be a replay available for free that you'll be able to see later. So going through here, I also wanted to mention our friend Kevin Cameron, CPA, came up with a wonderful PowerPoint spreadsheet program that sophisticated borrowers and especially CPAs can use to calculate and plan for forgiveness. Here on page 8, you can go to these web addresses and see a 4-minute summary of the video, a 46-minute walkthrough, which tells you a lot more about PPP program, or you can go to the Lineberg site there and you can actually buy it on approval. It's $179, and very, very few people have returned it. If you do buy it, it is updated for free every time the law changes, which is quite often. But even after the law changes, once you've updated, you can export the data from the old spreadsheet to the new one. It even writes a letter to the client explaining the situation. Then we're getting towards the happy hour here in Clearwater, Florida, where Brandon and I used to be estate planners. Now we're just PPP lawyers. But we have the recipe for your PPP power shake, 1 cup of parsley, 8 pomegranates, 24 plums, and then add Popov vodka after 5 p.m., blend it well, and you will better enjoy the PPP program situation. Page 13, we have the primary language summary from the Flexibility Act of 2020, which was signed by President Trump on June 5th. It is hard to believe all the things that have happened to us as PPP lawyers since this was passed. But I think the main thing it did for purposes of this presentation and those attending this presentation was that it cleared the playing field to allow borrowers whose loans were assigned by the SBA before June 5th to choose a 24-week forgiveness period or an 8-week forgiveness period. Now, if you got your loan after June 5th, you are stuck with 24 weeks. You can't use the 8 weeks. And I think as most people on this webinar know, the big challenge for so many borrowers was that your loan was based upon payroll costs for 2.5 months on average for the testing year. And now they wanted you to spend an equal amount or more in only 8 weeks. And for many of you, your businesses were slowed down, or you couldn't get the employees back even if you tried to. And there was a big concern that your loan would not be forgiven and that you would have to pay it back. So the vast majority of borrowers were able to sigh a huge whew of relief that you now have 24 weeks to spend all this money. And there was also something that was almost evil for a lot of people, and that was the 75% test, where you had to spend at least 75% of your expenditures on payroll taxes, health insurance, and retirement plans in order to get full forgiveness. And they moved that to a 60% test, which is much easier to pass. And it was going to be a cliff test, but they took the cliff test away, so no borrowers had to jump off of any cliffs. And at Section 5, they even gave us some more reasons that we wouldn't have to reduce the forgiveness, even if we couldn't bring the whole workforce back. There was we tried to rehire, but we couldn't because there weren't qualified people out there, and the exception for what happens if you didn't have as many employees because you were trying to follow federal guidelines or state laws which were incorporated into federal guidelines. So I know so many of you on this webinar have scars and mental exhaustion from trying to keep up with this barrage of changing rules, but hopefully this webinar will give you some help. Brandon, what should we mention from page 14 before we dive closer to the central discussion here?
Yeah, so just a little bit on the differences between what we can count for either our employees or for the owner compensation between the 8 weeks and the 24-week period, I think is relevant here. So item number 2, for independent contractors, if you go that 24-week period, you get forgiveness based upon 2.5/12 of your 2019 Schedule C income, which is 20.83%, and that's going to match up with the amount that you are able to borrow. So independent contractors should get full forgiveness using the 24-week period. If you have additional employees, then you still have to continue paying those employees to get full forgiveness. But at least for those independent contractors such as them, a true sole proprietor, you would get full forgiveness using the 24-week period. Now, if you're in the 8-week period, it is 8/52 of your 2019 Schedule C net income that you get for your owner compensation replacement. So you're going to have to spend additional amounts to get towards that full forgiveness if you elect to use the 8-week period. Now, for other borrowers, the same limits on compensation apply. For the 24-week period, owner compensation is capped at the lesser of this $20,833 amount, or the 2.5-month equivalent of their 2019 compensation. So that's 20.833% of what you paid yourself in 2019 if that was less than $100,000. For your non-owner employees, now that we have the extension to 24-week period, the non-owner employees' compensation is actually limited to 24/52 of that $100,000 limit. So that's up to $46,154 per non-owner employee for the 24 weeks. If you go with the 8 weeks, we're using $15,385 for the 8-week period as our limit for non-owner employee compensation. Now, there is one small item here on number 5 that showed up in the EASY application, which is a new application you can use if you didn't reduce your workforce or you couldn't return to full employment due to compliance with safety guidelines. You can use this simplified application. And in those instructions, they talked about a cap on retirement plan contributions for owner employees and capping those at, again, that 2.5 months worth, so 20.83% of their 2019 contribution amount. This isn't listed on the main application form in the instructions, isn't listed in any other guidance. It's only in the EASY form. So we're not sure if this was a mistake that was supposed to be in all the forms in the guidance, or if they accidentally left it in the EASY form. So we're trying to clarify with the SBA what this rule means and how this is going to apply. But I think that gives us a little background on the difference between what we can count in the 8 weeks, what we can count in the 24 weeks. So we'll skip forward now to the next slide. And this slide here, you can see we have, again, basically the same thing laid out in chart form, just walking through how they've calculated these percentages that we're going to mention, and then how it applies to different business owners. So independent contractors, again, 8 weeks, $15,385, or 24 weeks, $20,833 worth of compensation. And this applies automatically. You don't necessarily have to distribute anything out of the business. You don't have to make a draw. You don't have to pay yourself something. Independent contractors and sole proprietors just get this off the top. Now they can include health. They cannot include health insurance or retirement plan expenses made on their behalf. And these same limitations also apply to general partners in a partnership. The compensation limits for those are the same amounts, and they cannot include health insurance or retirement plan expenses. Now, for owner employees, which we think is a reference to owners of C corporation and S corporation shareholders, and we'll talk about this in more detail tomorrow, their compensation limit, which is the salary that they would pay themselves, is going to be $15,385 maxed out for the 8 weeks, $20,833 for the 24 weeks. You can include health insurance and retirement plan contributions, except they may be limited to that 2.5 months worth of 2019 contributions amount. There was a new rule that came about in the recent guidance for owners of S corporation. If you have a 2% or more ownership in the S corporation, we know that your health insurance costs are actually reported on your W-2. And because of that, the SBA has said that those shareholders don't get to count their health insurance expenses as a separate line item. They have to report them on the line where they are reporting the owner compensation, which is limited to this $20,833 amount. So health insurance contributions are subject to this limitation. So you can pay yourself your salary, you can pay for your health insurance, but it's going to be subject to this cap and can't go above that cap. The retirement plan contributions can go above and beyond this cap. And then finally, for non-owners, as we mentioned, $15,385 for the 8 weeks, $46,154 for the 24 weeks. And you can include your health insurance and retirement plan expenses paid on behalf of non-owner employees above and beyond these compensation limits.
So that was a lot to take in. There's no one on the planet Earth who could actually understand all of that at that speed. So we do encourage you to think about the spreadsheet, because Kevin has all of these rules in the spreadsheet. And until you lay the amount out, it's kind of hard to conceptualize it. If you're not a certified public accountant, I would urge you to get with a certified public accountant to make sure you understand how these rules are going to apply to you. But if you are a Schedule C, what we call an independent contractor or a sole proprietor, and you borrowed based upon your 2019 net income, if you borrowed properly, you should have complete forgiveness, no questions asked, you're done. All the complexity of this should not apply to you. If you have an S corporation or a C corporation, now you have 24 weeks to get all this spent, as long as you maintain your payroll or you fit into one of the several exceptions. So a lot of people are asking us, do I plan to take the 8 weeks or do I plan to take the 24 weeks? And by all means, if you can get this done in the 8 weeks, there are a lot of good reasons to have it over. The most important one for a lot of you is simply that you may need to borrow more money. You may need to be solvent, and having a potential loan that isn't quite guaranteed yet may prevent you from borrowing otherwise. In addition, if you need to stay fully staffed to get the loan because business is slow, but it's not because of regulatory issues, and you can make this thing work for 8 weeks to get it done versus trying to limp along for 24 weeks, then by all means, let me tell you, if I could get 94% of my loan done in 8 weeks and pay 6% back versus dragging this out over 24 weeks and not being sure what's going to happen in the economy during the 24 weeks, I'm going for the 8 weeks. even if that means that I will be taking some aggressive strategies, like paying my 2019 and 2020 pension contributions in full during the 8-week period, hoping that if I get audited on the 8-week report, that I will be able to switch to 24 weeks. We don't know about that for sure, whether the election of 8 weeks precludes the 24 weeks. I think there's about a 50-50 chance on that. The third advantage of getting this done in 8 weeks is that you will be able to file your forgiveness application based upon the rules as they are on the day that you file the application. And I don't know about you, Brandon, but I think we are 93% to 94% done with these rules changing. These shifting sands, I can't tell you that I'm happy about where the sand shifted in the last few days. There was more good news than bad news, not for everybody, but the ability to get this thing done and to file that forgiveness application while you have a good chance at full forgiveness, as opposed to waiting to see what might change, is another reason to get it done in 8 weeks. Section 4 here, again, we talk about the whole situation, about the ability to get credit. Brandon, anything to add to what I've covered so far?
Yeah, I think one of the main questions that we've been asked a lot is if I don't use the 8 weeks, but say I spend all my funds in the 11th or 12th week, can I go ahead and apply then, or do I have to wait until the full 24-week period is over? And as the way it stands right now, you have to wait until that full 24-week is over before you can apply for your forgiveness. And one of the reasons for that is you have to maintain your employee level for that entire 24 weeks in order to get, avoid a reduction in your loan forgiveness. So you're going to have to wait for that period to end so you can report on that data before you can submit your application. So that's another reason why the 8 weeks, and I think Alan mentioned this briefly, is that if you use the 8 weeks, we're only looking at maintaining employees for that 8-week period. We don't have to maintain them for an additional 16 weeks. And that could be a huge issue for a lot of borrowers that maybe aren't necessarily shut down due to government orders that are open, but just don't have customers coming into the business, don't have the revenue that they did, so they don't fit into one of the safe harbor exceptions to avoid a reduction in the loan forgiveness, but they can't afford to keep their employees on the payroll, and as a result of that, might have a reduction in their forgiveness. So these are all things to take into account and consider when we're deciding whether to use 8 or 24 weeks. All these have an effect on the amount that we can get forgiven. For those businesses that are shut down and go with the 24 weeks, you can rely upon that exception that you couldn't meet the employment, you couldn't maintain that employment level because of these guidelines issued by CDC, HHS, OSHA, and you can use that to basically treat it as if you were fully employed during the entire 24-week period. So that is a nice exception that can apply. But there is situations where that may not apply for some borrowers, and it could be a bad circumstance.
Now, we do have a correction to the bottom of page 20 here, and we did update the article. The language of the Flexibility Act says that you don't have to take into account reduced work hours that are the result of adhering to federal laws or guidelines issued by CDC, Health and Human Services, or OSHA. And you can still get your full forgiveness. Now, fortunately, the CDC website says that you should follow state law. So if your state closed you down, we do now believe, contrary to what this slide says, that you will be within the federal guidelines, but we'll know more in a few days, in a few weeks, as you wait to decide what you're going to do. But the other thing that the Flexibility Act added is that if you can't replace prior employees because they're not willing to come back, and you couldn't find new qualified applicants to replace them, then again, you don't have an issue with having reduced work hours as compared to the pre-virus rules. And then the other exception is where the employee is not available to return you made the written offer and they just didn't want to come back, you are going to have to rat on the employee to unemployment authorities according to the application, and we don't yet have a portal for you to do that on. So you may get your there may be some retaliation here, which will be sad in some cases, but this is what the government is apparently going to require you to do. But meeting these exceptions during the 8-week period versus the 24-week period is certainly preferable, because we don't really know what these rules are going to evolve to in the 24-week period. And there may be more people available. Employees are willing to come back because their spouses have lost the rich federal unemployment benefit, or at least the livable federal unemployment benefit. Schools may be reopened. So we can't really tell what the situation is going to be. The second advantage of going with 24 months is there will be more certainty in the law 24 weeks from now versus in the 8th week, which for many of you is just this week and next week. So that would be another advantage. A third advantage of waiting the 24 weeks is sometimes it's good to owe money. Let's say that you are negotiating with a landlord to get a rent cut. You're negotiating with suppliers that are owed money by the business. You're negotiating with the bank to give you more lenient terms. And you say, hey, get in line. I'm going to owe the federal government all this PPP money. I haven't gotten it forgiven. I don't know what's going to go on during this 24 weeks. If you force me to shut down, then I'm not going to be able to get this loan forgiven, and no one's going to get any money. And do you really want to be competing with the U.S. government, the SBA, to get money out of my bankrupt carcass of a company? So there may be negotiation reasons to keep that loan in place. Brandon, what about number 4?
Yeah, I mean, it also gets us more time to really plan for this with using the 24-week period. We can spreadsheet out, the alternatives. And then the nice thing I think about this too is that even if you use the 8-week period, you don't have to apply as soon as that 8-week period ends to use the 8 weeks. We can wait a couple months and say, okay, where am I once I add up everything or in my 8-week expenses, do I get close to forgiveness? Okay, let's go ahead and apply using the 8-week period. Or if we're not close, we still need to spend additional items, we can use that 24-week period and then apply, later down the road using the 24 weeks. So I think, this 24-week period now gives us some time to take a look at this, spreadsheet things out, talk to our advisors, talk to your CPA, think about what you can do to get this in place, and make sure we're appropriately following the law. And determining which period is best for us to use, which is the safest for us to use, make sure we get full forgiveness. Now, another thing that I've gotten some questions on, I mean, it relates a lot to the rehire exceptions, is what type of documentation do we need to keep for those? When we make written offers, we would need to keep that written offer in our record, and preferably also a written rejection from the employee that they did not want to come back to work. The SBA is going to be asking for that stuff to be submitted with the forgiveness application. And same thing, if you have someone that is fired for cause, we need to document that in writing as to why they were fired for cause. The other exceptions related to a voluntary reduction in hours by the employee, we would need to keep records of that in our file to show that they requested this reduction, maybe just as simple as an email from the employee saying, hey, I was working 40 hours. I now have to keep my child at home because of childcare issues, daycare not being open. I'm going to go to a part-time 20-hour a week. Just keep that email in the file so you have documentation when the SBA asks for that to be submitted with the loan forgiveness application.
Okay, so Brandon, here is the question that we get so often. If I can spend all the money I need to spend in 12 or 13 or 14 weeks, do I have to wait the 24, or can I file the forgiveness application right then and there and have this done by then?
Yeah, no, I think you have to wait to the 24. I don't think you can file anywhere in between. It's either your 8-week period or or you wait until the 24 weeks is over. There's no real flexibility to do a 13, 14 week covered period. because I just don't think the SBA is going to allow that, because you're going to have to rely and then submit your employment data and see whether you've been fully employed for the 24 weeks or qualify for one of those exceptions in the 24 weeks to avoid a reduction in your loan forgiveness.
Now, Brandon, the prior law said that as long as you brought everybody back by June 4th, if your workforce was reduced before April 26th and you brought everybody back on June 30, then you would not be penalized for the lower work hours. What is that rule now? What did June 30 become?
Yeah, so June 30 is now extended out until December 31st. But if you have your workforce back at full employment before December 31st, you can go ahead and submit your application and use the number of employees that you've rehired and now have at full employment on the date you submit your application. So you don't necessarily have to wait all the way to the end of the year to submit the application, rely upon that rehire safe harbor. You can go ahead and submit your application as soon as your 24-week period is over. As long as you've rehired everyone, you can have it earlier than that December 31st date.
Okay.
And another question too that's caused some confusion related to the 60% and 40% rule that I've got some questions on is, does my allocation have to exactly be 60% or 40%? For example, if I spent 80% on payroll and only 20% on the non-payroll costs, do I still get full forgiveness, or are my payroll expenses limited? And there is no limitation. There's no specific allocation that has to occur. As long as you get over 60%, you're okay. If you spend 100% on payroll, that's okay. You don't have to spend anything on non-payroll. If you spend 100% of the loan amount on payroll costs, that's retirement plans, salaries, health insurance, sick pay, that's all going to count toward forgiveness, and you can get full forgiveness for that. It's not we add up our expenses and take 60% of payroll and take 40% of non-payroll. That's not the way this works. It's just you add up all your payroll expenses. If that gets you to full forgiveness, then you're good to go. You don't have to necessarily have a specific allocation.
Now, Brandon, here's another reason that we should have put in the article that's a big factor. If you have employees who basically are being paid less than 75% of their hourly, daily, or whatever per unit rate during this testing period, then you basically lose your forgiveness dollar for dollar to the extent that you paid them less than that 75% rate. So instead of getting stung for 8 weeks of that reduction, you could get stung for 24 weeks of that reduction.
Right.
So that would be a reason to go with 8 weeks. And in fact, we're probably going to update the article, and probably some people who are on this call are going to send us emails with other ideas that we'll be incorporating into the article.
Yep.
Brandon and I and Kevin Cameron have really been working tirelessly, updating our materials, giving these webinars, writing these articles that you're seeing. It's been a real pleasure to help a lot of people who really need a lot of help. If you have questions, please feel free to send them to us. Maybe put in the RE line PPP question. We hope that you'll continue to attend these webinars. The one tomorrow at 10:30 Eastern Standard Time. We will keep these to half an hour. They're more intended for laymen, although if you're a layman, I'm sure you got well and confused here. There's a lot of good Forbes articles. The one by Tony Nitty, also known as the Tax Geek, does a great job. And then I try to fill in around in special areas to try to make them a little bit more understandable to the non-CPA. Brandon, any last words as we close in 29 minutes, which is pretty good for us?
Yeah, no, I think I'm good, Alan.
Okay, so we hope you have a great happy hour is soon upon us here on the East Coast, and may the rest of your day be productive and enjoyable.